Welcome everyone, this is Dave Gandarillas. I welcome you to my YouTube channel. I decided to put a little video together today. The focus is going to be on some basics on trading. I'm going to show you a chart, go over a couple things, kind of talk about the software subscriptions that are available on one of the opportunities I have and how you can utilize them to start putting your money to work for you. Before we get into that, I want to show you my YouTube channel here. If you want to stay in touch with me and receive alerts when I put out a new video, please subscribe. Click that little red button down there and then click on the little bell and you'll get an alert in your email when I put out a new video. It's going to be various topics. I'm looking for you to kind of share some comments with me on topics of interest, things I'm talking about. If you want to know more about what I'm talking about, if there's something else you want me to talk about, make sure you look at the video description underneath the video because I have more information regarding the video that I made. And like I said earlier, I'm looking for some feedback from you guys on what you want me to talk about. So you can find my various social media sites that I'm on and ways to get in touch with me. You can see that I have one of my opportunities here that I talked about in my last video regarding leads and how you can start getting approximately $2,000 a week for a one-time payment of $20. And as you see the value of these leads, you can decide to upgrade to higher levels. The levels will allow you to send out messages to multiples. At the $20 level, you're allowed to send out 20 at a time. At the 50, the 100, you know, you can send out 50 at a time, 100 at a time, 500 at a time, 1,000 at a time. So depending on how high you want to go and how many people you want to send messages out with a single click, you could decide how much you want to upgrade. What I would suggest is start at the 20, share this with some other people, get some other people to join your team, start making some commissions, and then put that commissions back to work with you and upgrade to the higher levels if that's something you want to do. But you can certainly get started and do okay on the $20 level until you start having thousands and thousands of leads, and then it's going to start taking a lot of time to send out those messages. So you'll know the right time to upgrade, and by then hopefully you'll have generated some commissions to kind of use to do the upgrade. Alright, so just make sure you look at my subscription, my video description here for more information. Again, these are the topics I could talk about, and I look forward to hearing feedback from you guys so that I can focus on these. Like I said, I'm going to talk about some technical analysis today and some Forex trading softwares that I'm involved in that if you're interested in, you can get involved in and start putting your money to work for you. I do want to make a statement up front that I'm not a financial advisor. None of this is considered investment advice. This is just me sharing my knowledge and what I know. It's up to you to make sure you do your due diligence and check the opportunity out, make sure it's right for you. You know, just do your research. Don't be lazy. Certainly ask me questions if you need some more information. And again, I am not looking to have people join me to be team leaders if you don't want to do that. These software opportunities that I have here, you can certainly just start and use as a customer and start making some passive unearned income, you know, by trading Forex and put some of your money to work for you. Now again, there's no guarantees on how much you're going to make. It's live trading. You know, as you know, we're in some economic struggles here in the world, so it's gonna be volatile. But the volatility is actually better for the software because that's what the software really likes to see and utilizes it to its advantage and positions you to make some money using that volatility. All right, so that being said, please subscribe to my channel, click the little like button, share it, make a comment, and stay tuned for further information. And like I said, provide me some feedback so that I know what you guys want to hear and learn about and discuss further. Alright, so that being said, Want to just share real quick my Facebook page. This is the main platform. The link to my Facebook page is in the description. Please contact me, send me a friend request, send me a little message. Let me know that you found me on YouTube. If you don't send me a message and I just get just a blind friend request, if I look at your profile and I don't see that you have a photo, you're not business, online, entrepreneurial minded, I'm just not going to accept the random friend request. So please just follow up with a short little message saying that you saw one of my YouTube videos and you'd like to connect with me and network with me a little further. All right, that's all I ask. 2 minutes. It doesn't have to be a long message, and that way I'll know that you're a real person. Maybe your profile isn't set up yet on Facebook, and that's fine because everyone's starting at a different point. Some people are more seasoned than others. Some people are new, just getting started. So I won't hold that against you. But if you're brand new and you don't have anything set up and you're just getting started, follow up with a little message so I know who you are and that you found me on YouTube and you're looking to, develop your skill set and develop your mindset, and develop your entrepreneurial personality and brand yourself online and all those kind of things. That'll come. But you have to let me know who you are. If I don't see anything and I just see a blank profile picture, I don't see a profile on a Facebook banner, I don't notice that you're doing anything online in terms of online marketing or entrepreneurial type things, I'm just not going to accept your friend request. So please, just take that extra 2 seconds, send me a little message. Further, this other site, this is my blog. Right now I just have that lead opportunity on here. I'm going to be adding the software opportunity on here so that you can click and find out more information. I will be reposting some of my YouTube videos in a vlog on here so that you can kind of come here as well if you don't want to go to my YouTube channel, and you can search for keywords. And also down here, like I said, I have other articles here that I've done over time where you can learn some mindset, some ideas, and some things that you should be figuring out on your own. But this will help you because it'll present the information in front of you, and you can kind of digest it and look at it again and again and again until you understand what it's talking about. All right, so already 7 minutes just for introductions, but I want to try and keep this short, so I'm gonna just kind of made a little list here of things I wanted to talk about. So let's get into the software. And now for that, I'm going to use a chart on TradingView as an example. So the opportunity that I'm involved in is basically considered software as a service. And basically what you do is on a monthly basis, you'll be buying a subscription and licensing to utilize software. And this software will provide you the opportunity to make your trading experience less emotional, more mechanical. It forces you to come up with a trading plan, risk management, all these kind of things. The company provides some guidance for people on what the risk levels should be set based on how much money you have in your broker account. The important thing is you put your money into your broker account and you just make the connection to the software. So the company never controls your broker account money. The only thing that you do is you buy the software package on a monthly basis from the company and you use it. You have a license for a single month. Every month you'll get a new charge for the software, and you maintain your own broker account. You have $1,000 in there, you have $100,000 in there. It doesn't matter. The company doesn't care. All they're doing is selling you the software as a service. So with that, it allows you 100% control of your money, 100% control of the settings of the software, and the company provides basic training on Forex. It explains all the software settings. It provides you some guidance on recommended settings based on the weekly anticipated news events and different things that are going on. We have people that are providing a weekly little webinar that tells you what to expect. But in the end, it's on you to maintain your account. It's not set it and forget it. You'll have to go in daily and check it out and decide what's good for you and what you want to do. Again, the company provides guidance and best practices, and you could decide to follow those, or you could decide to do, if you're very experienced with software and Forex trading and technical analysis, you could start changing the software to do what you want to do. Now, the great thing about this whole thing is when you first get started, you don't even have to use live money. There's something called a demo account. So you set up a demo account in a broker, and it simulates a real broker account with live money, but with fake money. So you can set up that demo account, you could connect the software to that demo account, and you could try it out for a week, 2 weeks, a month, 2 months, whatever you decide is comfortable for you to really understand what the software is and get a good feel for what's going on here. Now, most people will do it at least a couple weeks. Just realize, take the time to learn the software, take the time to see how it works, because by doing that, you're going to end up saving yourself money in the long run. Yes, you'll have a couple months of subscription charges that you're not making money yet, but the investment in your skills, your learning, all the different things that are going to set you up for success is going to be repaid to you over and over. So don't get hung up on getting live and start making money as quick as possible. Don't let greed get to you. Do the right thing, learn the software, reach out to me. Certainly, we have Facebook resources, we have Telegram resources, we have a bunch of resources. And within the dashboard, you have training, you have company webinars. There's so much support structure here to allow you to learn as much as you want to learn. So again, it's, you got to take responsibility for yourself. You got to put the time and effort. This is not a get rich quick scheme. This is not a set it and forget it. And if you do what you need to do, you can set yourself up and start earning, passive unearned income in addition to whatever you're doing now. So it will require you to check the website every once in a while for an alert. It's semi-automatic, so it's not going to automatically do the trades for you. It's going to do its analysis. It's going to send you a trade alert inside your dashboard, and then you're going to decide if you want to take that trade or not. So it's again, it's all 100% controlled by you, and you decide if a trade's going to happen or not. You could turn your software off whenever you want. You could turn it on. You could set how much percent you want to make per week. Again, you can close out your trades anytime. It's 100% in your control, but some manual steps are automated, but it still requires you to take accept the trade and get started. So again, it's a great thing. You don't need to know anything technical analysis wise, but you do have to understand the settings, how to turn it on, how to turn it off, all the basics, and that'll just come as you practice with the demo account for a couple weeks. So within a couple weeks, you certainly will understand most of the stuff. Again, take as much time as you feel you need to really understand and get comfortable with the software. You'll see once you get started and you're in the opportunity. There's a private group that other people will share their insight and how they're doing. So you'll start getting some social reinforcements and confirmations on how other people are doing. Again, none of it is considered financial advice. We have to make sure we are compliant with requirements of the SEC. None of us are financial advisors. We can't tell you what to do. That's why the software is semi-automatic, because it has to be your decision to take the trade. And that's just to be legit, and follow the rules so that this opportunity is here for long term. So so that was the auto trading. So there's another product called, I think they call it wedge trading, or trend line, or things like that. So what you can do is it'll send you an alert that there's a wedge pattern happening, and you can utilize, this is called Trading View. And what you can do is you can plot for example, USD JPY on the 15-minute chart. So it'll tell you something's happening of interest, and you can use this information to help set you up for a trade. For example, I'm going to show you a couple things here. So this is called a Bollinger Band. Basically, as price action breaches one side or the other, the Bollinger Band, it has a tendency to force its way back to the median, which is the middle of this Bollinger Band range. So as you can see, as it breached it upward, it pulled it back down. It actually continued going down through the bottom one. The deeper it goes, along with in conjunction with the RSI, well, it's kind of like a whiplash. Like, for example, here you can see it really penetrated the Bollinger Band, and then you can see right here this RSI level is greatly oversold. So there's going to be basically, by overlaying these two things, you get some confluence, and it's going to basically tell you that there's a good chance that the price action is going to force its way back to the median. You can see it happen here. So in addition to all that, the other thing you can do with some other technical indicators as you learn more, again, this is not for everybody. So the first one, the first opportunity I shared with you, you don't need to know anything. This one certainly will help you by learning some of the basics of Forex trading and technical analysis. So if you take a trend line and you draw it here, it is basically, a trend line is 2 points that connect, and this is basically, it's a downward slope. Price action keeps hitting this, keeps falling down, keeps falling down, keeps falling down. So as you see it breaching the Bollinger Band, and you see RSI hitting the oversold on the downward way, there's a good chance it's going to go back up. So what you do is you set this up in TradingView. You can actually do an alert, and you could set it up. Again, if you pay for this, I think it allows you to do this. I don't know about the free. But you could set up an alert, and when price action breaches this trend line, it's an alert that something interesting is going to happen. And what you want to do is you want to wait for confirmation. So once it breaches, you don't want to just trade right there. Typically, you wait for the next candle to make sure that it respects that. This is a resistance line, and once it's breached, it becomes a support line. So once it's validated, and now it's considered a support line, this is when you would possibly enter a trade. Now, to assist you further on an exit strategy of when you should get out, now you can decide to use something called Fibonacci retracement. So if you take this and you do a swing high to swing low, big money, big algorithms are written. There's trillions of dollar market cap here, 5 trillion or more traded daily on the Forex market. Big money basically does not do manual trading. So algorithms have been written, things have been written to kind of follow indicators and things that they believe, basically Fibonacci is really the core of it all. There's something called Elliott wave and all these other things, but basically if you learn Fibonacci, you understand Fibonacci. Anytime there's a pivot high to pivot low, there's a high probability that the retracement is typically always going to hit at least 50% to 55% retracement. So once you get the pivot high, pivot low, and it starts coming back, the softwares are always written to exit a trade once it hits 50%, or enter a trade once it hits 50%, because a lot of times once this retracement hits 50%, it'll turn around and continue back down. And a lot of times, basically from what I've learned over the years on YouTube and various technical analysis, who are more, I am no way considering myself an expert at this, but this is what I've known, what I've learned, and what I know right now. What I've heard is a lot of the algorithms are written once it hits the 55, and it might continue to go up to the 61 or the 65. A lot of times the algorithms are still trying to sell short until it gets to this negative 0.236 level. So there's software written to drive the price back down. In terms of wedge alert and your wedge trade, what you should be doing is trying to get in here, and then you most likely want to try and start looking to sell your partial positions or all of your position as it hits the 50%, because software is written to trigger downward pressure again once it hits the 50 or the 55, and depending on the momentum, it might make its way up to 65, but most likely if 65 is held and it starts coming back down, it's going to be pushed down to the negative 23.6. So again, these are all things that you can grow into. You don't need to know right away, but basically, you know, they'll send you an alert that a wedge is occurring, and like for example, there's two wedges, right? So this one's already active, and you should be in a trade here, and you should be looking to get out here. But then, immediately after that, you can see that there's another wedge already occurring here. So what you do is you draw from here to here. Now you want to at least touch a couple of the wicks. I like to do the wicks the most the most conservative ones that are like touching, like if you can go in, you can go in further, get the body. But if you really want to be conservative and know that, you know, you're gonna, when it really finally breaks, it's gonna break and it's gonna be okay. You want to make sure you do that. So, you know, there's a triangle that you can consider. But more importantly, the wedge, you want to draw a wedge, you would draw it like this. So, alright, so this is like, this could be possibly a new wedge in formation. So, as I was saying on the Fibonacci retracement, you would be looking to sell that last breakout that I was talking about when it hits the 0.55, but when it hits the 0.55, it's also a possibility that, you know, and exactly this might actually be more like this, to account for the fact that it might, price is probably going to go up into the 0.55. So this is probably the way. So there was one wedge over here, you know, for example, like that. And then once that broke out, you should be in the trade, and you should be looking to get out when it hits the 0.5 or the 0.55. Now, in addition to getting out at those levels, you should be looking for the next breach coming down here. You should be looking for so this is a buy trade that you should be in right now, and as it's gonna breach this other trend line down here, once it finally crosses over, and it's probably going to cross over maybe in the 0.5 or up here in the 0.65, and as this RSI starts hitting overbought, that's when you should be looking to possibly see a breakout to the downside, and then you should be looking for a short sell. So in conjunction with the software giving you the tip that something interesting is happening on the chart, if you get familiar with the Fibonacci, you get familiar with trend lines, you get familiar with support and resistance. Those are all training courses that come along with the software. When you purchase the software, you get this training, so you'll have the capability of learning all this through the opportunity. Also, there's a lot of YouTube experts that talk about technical analysis. There's babypips.com that gives you the ability to take courses. You don't have to go and spend money on courses. You don't have to. I mean, if you're the one that really needs structured software, structured training, that's a different story. But if you're resourceful and you can, the company has structured training built into it. But YouTube, various couple sites that I follow, they all give you the capability of learning. And you just got to make it your mentality that you're always a student and you'll never stop being a student. And you know, you can do what I'm saying here. Also, the regular software, like I said, you could do on a demo account. You could do the same thing with this. You could set up a demo account and start practicing some of these things on a demo account. You don't have to use live money. So I don't think it's going to happen during the live video, but you'll see over time, like, see how that hit that Bollinger Band almost perfectly? That's not random. That's because there's software written to take action when certain things are hit. Let me see if I can show you another example of how, you know, you'll start seeing that it's not random. let's see what this looks like. This Bollinger Band, this pivot to this pivot. Alright, so that worked there. Let's see what this one looks like. From down here to here. Alright, this was a little deep, but you could see after price action went down to high, it retraced. It blew by the 0.5, but in the 0.65 and the 0.702, so basically if you're doing manual trading, what you would be doing is the minute it hits this from 0.5 to 0.65, you would be laddering and you would be cost averaging into a position for the anticipated turn. Although here, what happened here was that it didn't breach the downward oversold. So this wasn't a guaranteed buy. Like for example, maybe this one. Let's get this out of here. So as you're watching this, you put the Fibonacci on this one. As it hits here, it's breaching the Bollinger Band. It's breaching the oversold. There's a good chance that there might have been a wedge alert on here, something like this. And as you can see, this wasn't a deep retracement, but 38.2 is another very, very common retracement level, and that just basically says the less of the retracement of the pullback of the swing high to swing low or swing low to swing high, the lower the retracement levels, the higher the trend, the stronger the trend. So that just means that the fact that price action wasn't pushing deeper and deeper, that means that there was a higher probability that it would go lower again. So let's see, there was a big swing here high, but you're looking, so these trades that you're looking to get into, at most you're looking for 10 to 30 pips. So for example, if let's measure this. So if you would have gotten in here, so this is like 30 pips. No, this is 3 pips. Yeah, this is only 3 pips. But if you would have hung it out and you would have stayed in, there's a good chance that from here to like say here, so that's a good 10 pips. Yeah, it would have been choppy and you would have been in the trade for a while, but you've been able to get out on 10 pips. And you don't have to go for 10 pips. You can go for 5 pips. You can go whatever it may be, depending on what you're leveraging and your risk management levels are. That's what's going to decide what you're going to do. Let's just check out one more for the heck of it. And then I'm going to call it quits because I don't want to make this video any longer than a half hour. So here's another swing low to swing high. Let's see what the Fibonacci looks like here. Alright, so again, it did kind of breach the 65 here, but it did, you'll see once this, so this is the important trade, right? Once it breaches the RSI on the high side or the low side, I basically have the overbought set at 70 and the oversold at 30. Some people do 75 and 25, but when you can actually put an alert on this line, right? So that when the RSI crosses up, you'll get an alert, and you'll see, look, see, I just got an alert because it's already probably higher than that over here. Well, back there where I was. But the important trade here would be you wait for oversold or overbought conditions, and then you look at the Bollinger Bands. You make sure that the Bollinger Bands are being breached. And then there's going to be a high probability that something's going to happen here. So what you would do is, you could put a trend line here, and you can wait for confirmation that it breaches it. And then you can enter a sell here or a sell here, and then you can consider the Fibonacci retracements. Maybe you would have gotten out Maybe you would have gotten in somewhere up here, and you would have gotten out at some point when it hit 0.5, 0.55, or even 0.65, right? So those would be your targets to get out after you get in on the sell. So you would wait for it to breach. Okay, let me turn this off before we keep hearing this. All right, so again, you would start tracking the trend line. You would look for the overbought condition, and then you would look for a break of the trend line. And once it's confirmed and it's treating the trend line from support now to resistance, then you would pick your time to ladder into a trade, and then look for the price action to, with the Fibonacci retracement on the pivot low to pivot high, you would look to target a 0.5, 0.55, or 0.65 exit. Maybe you sell half of your position at 0.5, then you sell the last, maybe you sell another 0.25, 25% at 0.55, and then you finish up the last 25% at 0.618. So you're not going to get in on a trade all at one time, and you probably should get out not at all same time. So right, you ladder in, what they call laddering, cost averaging. You buy a position, you buy a little bit more, you buy a little bit more, and from there, you position yourself for your cost average position, and then you look to get, you figure out your targets, 0.5, 0.55, or 0.615. So let me show you another thing here. Maybe this is another thing that could be happening here. Let's look at this from this swing high to this swing low. All right, so look at this. So there was a swing high, so swing low to swing high, and I was talking to you about the exit strategy. But look, this was a pivot. This is another pivot, and from there, even if you follow that smaller pivot, look how price action went from top to bottom, came up and touched the 0.55 exactly. Again, you'll hear other people talking about it, and I'm going to say the same thing. That's not by accident. That happens over and over and over again, and that's all because there's algorithms written to do things when certain Fibonacci levels are hit. So big money, big software had, basically, they bought in, they bought in. When the pivot finally happened, they had a target to get out at 0.55. So once they started selling at 0.55, that's going to drive the price action back down, and that's what pushed it back down this way. So even with so as it broke and you're getting into your new position to sell, you'd be laddering in, and there's a high probability at 0.55 or 0.655 price action is going to come back down just because of the retracement levels. So again, I hope I'm not complicating this. I'm not trying to make this complicated, but I wanted to kind of show you how you can utilize the software service that you're purchasing on a monthly basis, along with some additional indicators and some technical analysis that you can learn. You don't need to learn them at day zero when you first get started. The software is written, and that's the whole purpose of the software, to allow people that are not technical analysis experts. Again, I am not an expert. This is just things I've learned over the years, things that have been working well for me. Everybody has to develop their own trading strategy. You're going to have your trading personality. Are you going to trade at the 15-minute level, hour or day? You're going to be a swing trader? Are you going to be a scalp trader? You have to figure out what is good for you and how much time you want to spend in front of the charts. And if you don't want to spend a lot of time in front of the charts, and all you got to do is click a button to accept trades and let the software do the low-level buy, sell, set stop loss, set targets. All that stuff is semi-automated. All you got to do is accept and acknowledge that you want to do the trade, and then the software does all the mechanical steps that are needed to position you for a profitable trade. Again, risk management is always important. The important thing about the software, and the biggest thing about the software, is it takes the personal doubt that you might have. Like, you'll get into a trade, it's not going well, maybe you'll change your target price, you'll change the stop loss, you'll buy in again, or you'll double down. You'll do things out of fear and emotion. And by using the software, it takes the emotion out of the trading. And that's the most important mindset that any trader, any trader that does well will tell you is the things that will kill you the most is greed and mindset and fear. So if you take those out of the equation, you just set the software to do what you want it to do, and you don't change that, and you let it do its thing, and you adhere to proper risk management, and you give the software the breathing room that it needs to do what it does, it's gonna get you out of the trade. It's gonna make you money. It's gonna do good things for you. So again, this is not financial advice. This is my opinion. I'm sharing you information. I hope that you have interest and you'd like to start generating some money on a stream of income for yourself with using the software. The trade alerts, the wedge alerts are lower cost to get involved in. If you don't have a lot of money to get started with, you can do that. If you have a couple $1,000s you want to put into the other software, once you get enough practice with the demo account, it'll end up covering its costs and make you money on a monthly basis. Again, it's not a get rich quick. Basically, your idea should be that you're going to make whatever you make every month, compound it into the account, grow the lot size, grow it, put the money back to work with you, put the money back to work, put the money back to work. At some point, you do need to consider taking money out and using it, because that's the whole purpose, right? You're generating an income stream. But depending on what your starting levels are, it might make sense for you to compound your personal account. And again, don't forget, just because you're not pulling it out doesn't mean that it's still in your control. It's in your broker account. At any time, you could turn the software off and cancel out the account, the trades that are actively open, and ask your broker account for a withdrawal. So the money is 100% in your control. You don't have to ask a system for permission to withdraw. You don't have to wait for a certain day to take money out, or you're only allowed to take out so much per day. The only thing that's going to limit you on your withdrawal limits are your broker requirements. Whatever broker you get started with will have a daily limit and may require you to do some KYC to increase your limits. So those are all things you'll have to work out with your broker, and depending on which one you pick. But besides that, the money is in your control. No one else is holding your money. There's no risk that for some reason the person that was trading for you does something wrong and loses all your money, or tells you that you can't withdraw because of the drawdown. It's all in your control. The software is your control too, but the goal of that is that the company will provide you guidance and recommended settings. And as you learn more and you become more technically savvy with technical analysis and understanding all these things I talked about here, you do have the opportunity to change those settings. But the company has a philosophy is steady as she goes. Moderate settings to make you a consistent amount of money on a weekly basis. They tell you when they suggest when you should get in, when you should get out. They review news for the week. The software actually has a setting where you could turn off the software during news events. There's a bunch of good things, and if you're interested and you want to reach out and connect with me and ask me more information, I'll send you more information. I'm working on getting the link in my video description and on the website, so that'll be coming. But for now, make a comment under the video if you're interested. I'll connect with you one-on-one, either on Facebook or Messenger or WhatsApp, or however you communicate, and we can talk further about this opportunity. All right, so that's it. The video is already 40 minutes. I'm sorry, guys. I just get talking, and I just want to keep sharing information, and there's a lot of information here. So please don't get overwhelmed. That was not the intent of this video. But I just wanted to kind of show you how you can use RSI, Bollinger Bands, Fibonacci retracements, support and resistance lines and trend lines, all to create the confluence and create an opportunity for you to take a high probability trade Again, none of this is fortune telling. We don't know what price action is going to do, and all you're doing is looking for a high probability trade. Give yourself a little bit of an edge over everybody else. You get in and get out before everyone else. The idea is here to get in before the software reacts and get out before the software reacts, right? So you're kind of riding you're riding the tailwind of a race car or a wave, the wake, and you want to just kind of in and out, slow and steady as she goes. Don't get greedy, and realize that you're a small fish in a big pond when it comes to Forex market. Like I said, there's $5 trillion of money being handled here. And the big banks do not have people sitting in front of the charts making trades. They've created algorithms, they've created software that have characteristics that after you understand what they're doing, you can take advantage of that, get in before, get out before they get out, and kind of just take your little snips of profits and compound that each time and grow it further and further and create a substantial either retirement fund, vacation fund, maybe replace your monthly income from a job. Maybe now you're not working and you need to start generating some extra cash. These are all ways, and the software provides you the opportunity to do that. But again, make sure you take the time to learn the software, connect with me, connect with other leaders in the software, and talk about things. And again, we're going to expect you to do your part, which is going to require you to be committed to learn and to do things that you need to do. And we'll point you to resources, but we're not going to babysit. I'm not going to babysit. My point here is to share this great opportunity with you. I'm doing very well with this. I want to offer this to you guys to also take advantage of your future, start creating some possibilities for yourself, and not to be dependent on your 9 to 5, so that in case things go wrong like we're seeing it right now, you have another source of income that you can subsidize, complement, or even replace what you were making while you were working. So again, I look forward to having you on my team. I look forward to you connecting with me. Look in the video description. There will be a link for the opportunity and to get information. But for sure, connect with me on Facebook, social media, comment on the video. Let me know that you're interested, and I'll reach out to you. Take care, and I will be in touch in the next couple of days with another video. I'm not sure what I'll talk about yet, but please make some comments. Let me know what you want to learn more about. All right, take care.